Hey, how's it going? Hope everybody's having a blessed weekend. I didn't get around to doing this trade review yesterday, but here we are. We're going to break it down right now. So it was an L for me, but overall, this was it was a solid setup. I mean, it was a nice looking setup, actually, a really nice looking setup. Had about everything that I wanted. It was one of those plays, which we'll go into in a second. It kind of sucks. I mean, I'm good at taking L's. I stay level headed. So through wins, through L's, I stay quite level-headed, but this is one of those instances that I'd be lying if I said it didn't get under my skin a little bit when this happens, because every now and then this will happen. Okay, so we're going to go into it here in a second. So let's start from the higher time frame and let's work our way down. Okay, we're going to remove everything off the chart and we're going to start from scratch. Let's go to a daily chart. Okay, so daily chart, Euro NCD. Is this bullish or is this bearish? Bullish, right? See how we're consistently putting in higher lows, we're consistently tagging the highs. It's operating with 100% within a bullish market structure, okay? 100% within a bullish market structure. You see right here, we had this big, strong shift in market structure, cracking that high. Then what do we need next for it to be confirmed? We need our swing low level. We got our swing low level right there. Look at my cursor. See how price made a swing level right after breaking that high. Market structure confirmed to the upside, 100% bullish, right? So we were trading with the higher time frame trend. That's number one. Okay. Now on the 4-hour chart, which is our other higher time frame chart, we had a higher time frame level. Can any of you identify it before I tell you? What level do you think I'm talking about? Right there. That's our bullish order block. See this level right here? Look at my cursor. That is a bullish order block. Okay. And then, so that was our higher time frame level. As I always tell you guys, it is way better if you have a higher time frame level. You have a reaction off of a higher time frame level. We had a higher time frame level. Okay. And when I say reaction, what do I mean? I mean a lower time frame shift in market structure. So we had that. We also had this fair value gap right here. If you see this, again, follow my cursor. 1, 2, 3. See, in between that, we got nothing but a gap. The top of this first candle, the bottom of the third candle, they do not touch. And it completely rebalanced that price action. Okay, I have videos on fair value gaps for any of you that are confused. Just search my channel for fair value gaps. I have several videos on it. Okay, so that we filled in that imbalance, which is bullish. Okay, because that pocket of price action is now efficiently delivered. We tested this higher time frame level of support. We traded down into a discount marketplace below 50% equilibrium. Higher time frame trend daily chart. We've already concluded that that's bullish, right? We're trading with the overall higher time frame trend. So we're looking good. We're looking really good, really nice looking level there. Now let's go down to 1 hour. Okay, 1 hour chart. So real quickly, I'm going to put in some day dividers to kind of clean it up here. Okay, so you see this horizontal blue line? That is that 4-hour bullish order block. It's just displayed on a 1 hour chart now. So you see that? See how price came down into that level right here? We traded lower, we traded lower, we traded lower, and we tested that 4-hour bullish order block. Again, we're on a 1 hour chart now. What happened after testing that higher time frame level? Remember, 4-hour and up are higher time frame charts, okay? So we tested a 4-hour higher time frame level. Now we have our 1 hour chart, which is my lower time frame chart. I mainly use, for lower time frame charts, I mainly use the 1 hour and the 15-minute. Those are my main time frames. Sometimes the 30-minute, but mainly the 1 hour, 15-minute, that gets the job done for me, okay? So we had it on the 1 hour chart here. And what do we have? Again, what do we want off of that higher time frame level? A lower time frame reaction. Boom, look at that big, nice, explosive move right there. Look at that huge move to the upside. A lot of conviction, a lot of strength off of our higher time frame level. That's what I mean when I say lower time frame confirmation. We want to shift in market structure, okay? Why is this a shift in market structure? Well, look right here. Look at my cursor. You see that level right there? See that swing high level? Highs high in the middle. And then we got 2 lower highs on the left and the right. That makes that a swing high level. Price broke that swing high level. That is a shift in market structure. And not only a shift in market structure, but a high probability shift in market structure because we have our fair value gap confirmation, strong close above the level. So that was our shift in market structure. And I want you to answer among yourselves real quick. What is this right here? I want you to look at my cursor. What was this move down right here? That was our Judas swing. Okay, Judas swing, aka I have videos on that as well, but Judas swing is basically a fake run in the opposing direction where price really intends on going. It does this to grab liquidity. Okay, so And what key liquidity pool was it grabbing? It was grabbing Asian sessions. So you see how price is just consistently, again, follow my cursor. See how price is just consistently trending lower, trending lower, trending lower, trending lower. And right here, it looked like it was going to continue that trend to the downside. Right here, right after New York open. So right after 12 o'clock a.m. Eastern time, it came lower. It took out these lows. Looks like that trend's going to continue. Looks like it's going to keep moving lower. Boom, you get a nice explosive move to the upside, fake out, right? That was our Judas swing to grab Asian liquidity. So we grabbed a key liquidity pool, also being what? Also being previous day's lows, because remember, this is the start of a new day. That was low of day. So we grabbed, it was Asian lows, but it's also low of day, key liquidity pool. So we took that liquidity out of the marketplace. What do I always tell you guys? Wait for liquidity, you'll be the liquidity. Or wait for liquidity or you'll be the liquidity. We waited. It took that liquidity on our Judas swing. Okay? It took that liquidity on that Judas swing. That was the purpose of it. And then boom, you get your shift. That's what you want to see. Okay? Now what's next? Well, also it's worth noting we have a 1 hour level in here. This is a 1 hour bullish order block. Remember just how on the 4 hour chart, we had that higher time frame level. Now on the 1 hour chart, we have a lower time frame level. Price is fractal, remember? There is a 1 hour bullish order block. That is your point of interest, okay? And that order block, something else to note, and note how it's kind of starting to connect here. This was also where we had that Judas swing occur. That's a very important point. See that Judas swing? That was basically at the beginning of that Judas swing where we had it taken liquidity. That was where it originated at. And then boom, you get a nice move. That's your 1 hour bullish order block, okay? Because that was a change in the state of delivery, right? So, and then what did price end up doing? Well, it took out this high. As soon as it took out that high and it traded up, it was in a short-term premium, right? We don't want to be, it's bullish still, but it's in a short-term premium, short-term expensive. We don't want to do that. We don't want to buy up there. We want to wait for price to trade back down into a what? Into a discount. So let's take our Fibonacci from this low of that liquidity run to the high of that move higher. When does it enter a discount? When it trades below 50% equilibrium of that price range. See that? There's 50% equilibrium. As soon as it trades below that, it's in a discount, okay? And also note that fair value gap is in a discount as well, okay? So I grabbed this thing basically right as we got into New York. So it came down and tested this level right before New York kill zone on this move lower. I got to wait for 7 o'clock as per my rules. But as soon as 7 o'clock hit, I'm marking it in. I'm marking it in. I'm getting in this play because I like it. Okay, the risk is really good on it. It's 2-to-1 for me. So risk was really good. I liked where it was at coming into 7 o'clock. So there was no reason for me to just put a limit in and wait. I just marked it in. Got into play. Okay, so where was my stop on this? My stop right underneath this. That was the low of that fair value gap. My stop was low of day. It was underneath of the fair value gap, but also where we had this key liquidity run. That is an amazing, amazing stop out point when you have both of those, okay? That is the highest probability stop out point. I should have made that more clear whenever I made my video on best place to put the stops. I don't think I really pointed that out. I talked about the fair value gap, keeping your stop underneath the fair value gap, but really the best place is when you have both of them. When you have the fair value gap, but it's also underneath the fair value gap is where you had that key liquidity run take place. So that is the best place to keep a stop. That's where I was keeping my stop. My profit target was high of day. Look right here. So you can see it came down, tested that level, really good risk reward as you can see, and then it came up. Okay, and I didn't get everything on the first run lower. I didn't get all of my position. I was able to add on this second push right here. If you look right here, 9 o'clock on that 1 hour 9 o'clock candle, I added on that second push lower because it just didn't give me enough time on the first move. And then what happened? Right here, we had a spike up in the high of day. So you might be thinking, hey, so you got your PT, right? Nope, I did not. I did not get filled on it. I had a limit up there. I had a limit at high of day and I wasn't able to get filled on anything, nothing whatsoever. So it spiked up into it and then it just rejected pretty hard. And then it ended up coming all the way lower and stopping me out. So again, I'm good at taking losses. I'm good at taking wins. I'm able to stay pretty level headed in both scenarios. But this is one of those instances, again, that I would be lying if I said it didn't, when it happened, it got under my skin a little bit. Okay, I'm human, and believe it or not, I have those emotions as well. They creep in sometimes. But then I got to remind myself, you know what? It's just one trade within the many within your system. You're going to have more setups. So don't let it beat you up. Don't let it unground you, right? Now, really though, it probably would have been wise, looking at this in hindsight now, after we had that pop up into the high and come all the way back down into my entry, likely it would have been a smart play to cut it at break even. Okay, just to preserve profits, because it was Friday, we're going into the weekend, it's the end of the month, and I just ended up giving back some profits. That's all I ended up doing. And it came all the way back down to my entry. It was getting later in the morning. It likely would have been wise to cut it break even, but I didn't. And it is what it is. It happens, right? But that was the play, and that was my reasoning. And as you can see, again, it's a solid play. Like, every single time I would take this play again if I saw it, like, no hesitation whatsoever. Like, this is a good looking setup, as I already pointed out. Good risk reward. It was 2-to-1. So if you took it off that level and you were targeting high of day, that's 2-to-1. And you could have targeted yesterday's highs as well. That's a valid PT. You could have targeted previous day's highs, and I mean, just beautiful risk reward on that. And you're trading with a higher time frame trend. Yep, it just looks like again, it's just kind of mistiming it. It had a nice bounce. It respected that level. It's just one of those instances that it sucks, to be honest. It sucks when that happens, and it can kind of play with your emotions a little bit. It even, like I said, it even played with my emotions a little bit when it happened. But I had to, I had to get back in control of myself and just remind myself there's going to be more plays. It's just it's one within many, or it's one of many within your system.